The hot seat this evening, joining us now, Brian McMillan from Investec Capital Markets. Brian, thank you very much for your time.
Good evening.
I think firstly, let's just take a high-level stage here and say, what do you do effectively at Investec Capital Markets? I know that very closely linked to equity-linked products. I want you to basically give us a little introduction.
Sure. Well, we work in the financial product sector. What we do is we put together passive-type products, investment products, mainly equity, sometimes commodities, sometimes foreign exchange type products. But the main focus is really on equity and in that sector, really looking at capital preservation products. So capital protected, where at the end of your investment term, you would typically be guaranteed to get your funds back at the end of that.
And it sounds very appealing in these markets, Kevin.
Capital protection your way.
Okay, absolutely.
And in terms of markets, which geographic-wise, where would you be involved in?
Yeah, well, we have two major sort of regions. We obviously look at South African products. And then in the offshore arena, what we try and do is we pick a theme probably once, twice a year. And what's really appealing for that for investors is, you know, when you're dealing with a lot of offshore markets, it's very good to have that capital preservation in place. So we take a sort of a view, for example, at the moment, that we believe people should be investing in Asian markets, in emerging markets, over the developed markets. So we put together a basket of different indices, equity indices. We put that together for, let's say, a 5-year period, and we capital protect that. And that capital protection is in Australian dollars. So it's really for offshore investment for somebody looking to take his 4 million allowance offshore or using asset swap.
Brian, can you just explain, sorry, Brian, can you just explain how you're actually doing the capital protection when it comes to the equity market?
Sure. Well, what we're doing here is we're basically taking two types of investment. We're taking a bond investment, which gives you that capital preservation, and we're taking equity markets and putting them together and giving the client or the investor really the best of both worlds. So we take a portion of the client's funds and we place that in a bond. The balance of that we take and we invest into options over those markets, and those options give us the upside should there be any upside in those markets,
limiting the downside
and no downside. And then the bond component actually preserves the capital there.
I'm going to jump in now with
Sure.
Japan, because we were discussing it. We had a heated conversation about Japan earlier, but we did all come to a consensus. The economy has gone nowhere for, you said, over 20 years. I see Japan here jumps out
Yes,
at me, and
sure.
I'm going to have to get your comments on Japan and why you think it's worth including in this East Asian basket that you are looking for additional exposure
Sure.
to.
And you know, what we do is we're very much a passive view. We look across the region. So we've got China, we've got Hong Kong, we've got Taiwan, we've got Korea, and we've put Japan in there because I don't think you know, an East Asian basket can't exclude Japan. It's still a very large economy.
But is it an economy that's going to go anywhere, Brian?
I think it can do. You know, we've got a 5-year investment view. It hasn't gone particularly well for the last 10, 15 years. It's stagnated. The market hasn't done. But if global growth comes back on track, certainly Japan will grow, and it is getting a boost coming in from China and those other regions as well.
In this involvement within the Asian region, are you including Australia in the blend of those indices, or is this purely an Asian exposure, more in the emerging market space, with Japan being the exception as the developed world?
That's exactly it. We do have Australia in there, in that the currency that you're invested in is the Australian dollar. And the Australian dollar has really become a proxy for that region. You know, it's becoming a powerhouse in that region. It also, we believe that, it has very good economics. They've got a very low debt to GDP base, probably the lowest in the world almost. They've been very conservative.
But it's also underpinned by commodities. That Aussie dollar
absolutely.
is hugely underpinned by commodities.
And it leads back into that investment case. You know, China is where those commodities are going. So if you believe in the China story, where we believe over the next 5 years at least for the investment, We're going to see Chinese consumers becoming far more important in the Chinese market rather than the export side. And commodities, they're doing huge infrastructure still. As a percentage of GDP, their spending on fixed investment is much larger than anywhere in the world. And those commodities will, we believe, still feed in. So we believe it's a good story with the Australian dollar. The Australian dollar has been very strong over the last 2-3 years, and against the South African rand has been very strong over the last 10 years. So we believe that'll continue, not necessarily getting stronger, but certainly it can hold its own over the next 5 years. And to be capital protected in Australian dollars, we believe it's a good call.
So and this is quite a tricky thing to answer, but maybe give us some sort of
You're
indication.
not to try and trip the guests up.
No,
on
I'm
the
not
desk.
doing that. I'm not doing that. I just want a basic, general sort of idea. If you had to structure the portfolio for a client where they had a mix of South African assets and offshore assets, with the offshore being predominantly, as you say, an Asian exposure, what ratio would you have on that product? In other words, what percentage domestic, what percentage international would you be generally advising your client or your investor to look at?
You know, I think that goes down to your financial advisor. Certainly Investec has Investec Wealth and Investments, for example. They have a portion that they would take of a person's portfolio and put it offshore. We're not saying at all, put all your investments into this. This would form a small part of your offshore investments.
So it's of an already diversified portfolio.
Yes. So you would have, I would imagine the majority of your investment portfolio would be in South African shares. You would take a portion offshore, which you could then put into a number of different markets. And we're saying, for the investor who's looking at that Asian market and saying this could be a good growth area, this is the type of product. It's easy to invest in. It's got that capital preservation. So from that point of view, the investor doesn't have to worry about, which particular stocks are we going into? Are those the correct stocks? Where you're looking at a region, looking at indices, and then providing that backstop of the capital protection.
Brian, earlier on in the discussion, you were saying that every year you look at one or two themes that you then follow in terms of these investment ideas. So the construction.
Can I disclose here? Kevin earlier this year said to me that he's finding it very difficult. This is why he's asking you this question, to find any themes in the local market. So that's why he wants to find out what your themes are.
So thanks a lot, Ron. So what are your themes at the moment? What are you looking at in terms of that thought that you're saying we are picking up on this? I can understand the emerging market story globally and the Asian growth and the interregional trade, and therefore that is a strong offshore theme.
Sure.
Other themes that would strike you particularly locally?
Well, I think South African market, I know Investec has been overweight resources over the last year or so. We remain overweight in those. I think we're overweight equities as opposed to cash, certainly. But I think generally, we're trying to provide a passive type story. So we would look at the research, say, where can we provide a product where investors can't get exposure at the moment?
So would that be more of a geographic thing? In other words, would you at some point shift from Asia into another part of the world?
What we try and do is provide as many products as we can out into the market where there is appetite. So for example, last year we looked at Titans 50, which was predominantly large stocks in the US, with some of the largest stocks in Europe as well. And previous to that, we had very emerging market Asian ones. So we're not in the business of trying to say this is going to be the best investment place. What we're saying is research shows that these markets are growing well, and provide a product that people can invest in.
I'm still here in studio. Last time I checked, I was hosting the show.
Oh, did you want to ask something, Brian? Please go ahead.
Can I jump in here?
Sure.
Just checking in terms, as you say, you don't try and pick the next best investment or the next best theme like Kevin does, but you do definitely look at these territories. You're extending your exposure to the East Asian basket. Which of these territories is, in your opinion, the most exciting? And you've mentioned Hong Kong, Thailand, Korea.
I like Korea. I really think Korea's, certainly over the last 10 years, you've seen the growth, and certainly South Africans can see it, you know, from brand names coming through, Samsung, now #1 in televisions in the world, Hyundai's, Kia cars. Those were brands that people weren't looking at 10 years ago or laughed at 10 years ago, and now they're, you know, top of the range sort of consumer goods. So I think that's one of the areas we should certainly look at. Taiwan's very strong in semiconductors, in technology. So there's a broad spread there.
Kevin, as a peace offering, you get the final question to Brian.
Last question. In terms of how you blend these products, you like South Korea, would you then have an even weight between the different countries, or would you be upweighting one index predominantly over another?
No, again, you know, because we play in that passive space, ours is not to, you know, to try and pick which of those are the best. We're saying here's a spread of them. Here's an easy way to access these markets with your offshore cash. And because it's offshore cash, a lot of people, you know, are very hesitant to invest in something where they don't know. So by providing that capital preservation, you know, it really gives them peace of mind to move into those markets.
We're out of time. Brian, thank you very much for your time this evening. Brian McMillan from Investec Capital Markets.